Welcome back to GoldSeek TV. I'm Vanessa Collette, and I'm thrilled to be joined by Paul Van Eeden of Cranberry Capital. It's great to see you, Paul.
Thanks, Vanessa. It's great to be here.
Now, Paul, I've followed your work over the last sort of 8 to 9 years, and I really recall you talking about the fair value of gold, and
Yes.
I think you had an opinion that was a little bit different than a lot of the mainstream at the time that we were kind of in the height of the bull market.
Yes.
So what's your take on gold specifically right now?
Well, I think gold is trading at a much fairer value right now. And I'm glad you mentioned that it's the fair value of gold, because I'm not trying to make a gold price prediction. I'm trying to create a measure of valuing gold relative to the US dollar. And right now, my estimate of that fair value is about $1,100 an ounce, which is
Really?
about where the gold price is trading. So
Right.
I feel much more comfortable with gold at $1,100 than I did when it was $1,700 or $1,800 an ounce.
So you've revised it upwards in the past, sort of from, I think it was 600 or 700 from back
It was
then?
700 many years ago.
Okay, yeah.
But the fair value always goes up because the fair value changes depending on the monetary inflation rate of the US dollar
Okay.
and the amount of gold that we mine every year.
Right.
So every year the fair value goes up by a few percentage points. That's why it's creeping up. The problem was that the price of gold went up much, much more rapidly than what the value of gold went up.
Right.
And that's typical in a bull market. That's what a bull market is. What the fair value calculation allows me to do is take the emotion out of the bull market and recognize that the
Right.
price is expensive.
Right. So now, because you value gold in this way, do you see it continuing to rise?
I think in the very short term, the risk for gold prices is downward.
Okay.
The US dollar is strong. I don't think the US dollar strength is going to change imminently. And as the US dollar exchange rate goes up, the price of gold in US dollars goes down.
Right.
It's very simple relationship that we have there. So I'm not particularly bullish on the price of gold in the very short term. But
Okay.
in the medium to long term, I think gold will stabilize, and then the price of gold will gradually rise until the next bull market,
Right.
when it gets ridiculously expensive again.
Well, you said it kind of got ahead of itself a little
did.
bit, so that you see that happening again. Do you have a specific time frame for that, or no?
No. But the only reason, Vanessa, I said it happens again is because after every bear market, there's a bull market.
Right. What goes up must come down, and vice versa.
And
Yeah.
it's doomed to repeat itself.
Right. So it sounds like you're still, invested in the precious metal sector. You're still, I'm not sure if you're holding bullion specifically, but you mentioned you're invested in a mining company, which was Evrim Resources,
Yes,
and that's through
Evrim
your fund?
Resources. Yes. So I do not own any bullion. I sold
Okay.
all my bullion long ago when I thought gold was getting very expensive.
Right.
The reason I own Evrim Resources is because it's an exploration company, and the mining industry is absolutely critical for our society. Nothing that we do, nothing that we have, can exist without mining. It's one of the primary industries. And the mining industry, in turn, cannot exist without the exploration industry because the mines deplete. We run out of mines. So I think that being involved as a businessman or an investor in mineral exploration is an opportunity to be involved in an industry that has to exist by necessity. It's a very interesting industry,
Right.
and it offers great potential for creating value and creating wealth.
So it sounds like, fundamentally you believe in, the demand for resources, kind of being a perpetual thing.
I think we have to be careful when we say the demand for resources. I'm not trying to suggest that the demand for resources is going to increase or decrease.
Okay.
But even if the demand for resources remains constant, we are consuming vast amounts of metal every year,
Right.
even if there's no increase in the demand. And we cannot live without those things. We make cars with them, we make
Right.
phones with them, we make eating utensils with them, we make belt buckles.
Right.
We will always make these things.
So what's your take on China now?
China's going through a very tough readjustment. They built overcapacity in many different sectors, and they have to adjust to that capacity. In the process of doing that, they weakened their banking system, and there is now a change in the confidence level of the central government in China to be able to manage all eventualities. It's becoming apparent that they cannot manage and control absolutely everything.
Right.
But having said that, China is a very large country. It has and will have a very strong economy going forward. They will recover. And when
Right.
they come back, they will come back in a very big way. I have no doubt that China will be the largest economy in the world. I have zero doubt about that. Where I disagreed with most analysts is they expected it to be imminent. I think China has to go through a few cycles
Right.
of boom and bust before they get there. And
Some
we're
growing
seeing a
pains.
bust.
Right. Now, what's your take just on the overall economy?
Weak. As China has been expanding and creating overcapacity, they have created overcapacity in other areas. If you have manufacturing, let's say North America, that's being displaced to China, you now have overcapacity in America because you had the capacity to manufacture. Now that manufacturing is taking place somewhere else. So by moving manufacturing and capacity to China, we created overcapacity in Japan, North America, and Europe. But in China itself, they created overcapacity. So we now have overcapacity almost everywhere in the world in many different sectors and of the economy. At the same time as that happened, we have a demographic shift taking place. So if you look at the demographics of North America, Europe, Japan, and even China, which has some of the worst demographics because of their one-child policy,
Right.
we have a very uncomfortable position where we have both overcapacity and weak economic growth. So it's going to take the world a long time for the economy to expand into this capacity.
Right. It's like some slack that needs to be taken up.
It's a lot of slack that needs to be taken up.
What's your take on the U.S. economy?
I think the US economy is going to be relatively better, relatively stronger than the other economies. So Europe is still behind the United States in getting its house in order. China is on the way down. Japan has been stagnant for decades. So on a relative basis, I think the US is going to stay the strongest. That means the US dollar is going to remain strong. That's why I don't think that the end of the gold bear market is imminent. But I will say this. For commodity speculators and people in the commodity business, I don't think that what I said earlier about demographics and overcapacity is what's going to control commodity prices. Now, I'm not talking about gold now. I'm talking about things like copper,
Right.
nickel, lead, zinc. What's happening there is we're consuming, even at no economic growth, vast amounts of metal resources every year. And the mining industry isn't finding enough resources to replace what they're mining. So as time goes by, we're creating a very large and very significant deficit in our future capacity to mine. That's going to catch up with the mining industry before the economy catches up with the overcapacity.
Right.
So if you want a prognosis, my best guess is that we're going to see a return to stronger metal prices long before we can predict it based on economic fundamentals. It's going to be supply driven, a lack of supply.
Great. Well, thank you so much for joining us today, Paul. It was a pleasure having you.
My pleasure.